So welcome back, everyone. Fantastic new year. I'm very, very excited to be back here again on the Property Frontline for our Market Watch series. Here again with Scott Hoaxang. Hi, Scott.
Happy New Year, everyone.
So in this episode, what we're going to do is cover off a full market wrap for what happened in 2025. And we are also, as usual, going to cover off the most reliable data sources of Cotality, PropTrack and SQM. And then Scott and I are going to give you a really unique deep dive into some of our purchases for 2025. We'll talk about, the pros and cons of them. So let's get into it.
Into the data. Here we go.
So, yeah, as usual, we use the top 3 most reliable sources of data. And this is our summary for the month of the 31st of December. So, Scott, just high level, not state by state, thoughts on this?
Just that we are seeing weakness in Sydney and Melbourne that's noticeable for the month, likely in response to people's concerns over future interest rate hikes. And our more commodities markets have continued their strong growth.
Yeah. And of course, I would say that there is a bit of hype about, the market's dropping, but December is such a short month. You actually don't have like a good capture of a typical month. And I would always say December is where I get my best bargains because, people who are really active on the market, like sellers who are active on the market have already sold their properties. And so you sort of just get to pick up some properties that might have been priced a little bit too high. So yeah, I don't think the slowdown is completely reliant or due to what the media says it is. But you think there is like a little bit of caution due to the rates?
I think so, more on the higher end of the market. And I know you're doing a lot with investors on those lower half of the market, and they're probably still going full steam ahead.
Yeah. Okay. Alrighty. Right. So this is the stuff that Scott lives for, right? So
This is our go ahead.
no, well, I was going to say, if you want to kick us off.
Sure. This is our full year price growth wrap up from all the data services. So there's been a little bit of this out in the media. Nobody's really put it together in a summary format like this. So Deborah and I are happy to do that work and put summary tables together from all the providers. We'll run through
with help
different
from our
cities.
support team, but that's
Yeah, there you go. And our support team, of course. Running through the cities. Sydney actually had a pretty reasonable year with Cotality and PropTrack having house price growth at 6.9%. The SQM number is a bit of an outlier at 11.5. Remember, that is asking prices for the whole year. So probably the Cotality and PropTrack numbers are slightly better at determining market growth for the year.
Oh, yeah.
We saw growth in Melbourne, sort of finally. I think this is probably the first year we've seen growth over inflation in some time. 5.8% growth from Cotality, 4.7 from PropTrack, and the SQM number was 7.2. Then moving to one of our star performing markets, Brisbane, it's just chugging full steam ahead, it would seem. A whopping 14% growth for the year from Cotality, 13.5 from PropTrack, and 17.3 from SQM. And last, Adelaide, which has had very strong growth past couple of years, maybe starting to lag Brisbane and Perth a bit. And I think you've heard that from us recently on a few recent podcasts. 8.7% from Cotality, much higher number, 12.5 from
Yeah.
PropTrack, and just a kind of a crazy 20.5% bump up in those asking prices from SQM.
Yeah. And like, look at that. Those, that, such a range. I wonder what is behind that. Mm,
It is quite odd to see a gap of 3 or 4% from those big data services. 1 or 2% is possible by using different market definitions and so forward. Yeah, you just have to wonder sometime what is in that number.
mm, yeah.
Mm.
And I mean, Adelaide is a very small market. So that's where you would say, well, like depending on what sales they include in their cutoff times, could influence it. But I just find that, it's really standing out, that disparity there.
Yeah.
Uh, Okay.
You
Anything
want
else
to
you want to add?
take us through the next four, Deborah?
Okay, yeah, I will. So Perth, Cotality has Perth spiking up by 15, nearly 16%, and PropTrack very similar. SQM, even though SQM, so Louis Christopher has always been very bullish about Perth, but like look at what he says happened with asking prices. So does that mean that the asking prices for people in Perth were low and their sales were much higher? They achieved much better than they
Mm.
expected. Hobart, 6.8. I'm so surprised about that, but still wouldn't buy there. And PropTrack, 9%. SQM has asking prices at 10%. Darwin, wow, what an absolute magnificent year Darwin had in 2025. Once again, super small market, and I wouldn't be wanting to buy there for consistent long-term capital growth. But yeah, depending what your reason is, they've done well. So Darwin, nearly 20% up year on year. PropTrack has Darwin up by nearly 15%, SQM 11.5% there. Canberra, a moderate 6.4% increase. PropTrack has Canberra up 5.6%, and then SQM had asking prices at 6.8%, and then nationally, the great leveler, nationally, Cotality has a national increase at just under 10%. PropTrack has it at 9%, and SQM has it at 13%.
The median house price nationally in the country is 980,000. It's crazy to think that we're heading toward 1 million as the median house price, but on 9% growth, I mean, your typical person has made $90,000 on each house that they own around the country. Now that's just a broad average, but if you own two or three, it's pretty significant equity uplift there. Quite a bit
Yeah,
more than what a lot of people are making as their income.
correct.
Um, quite a good year, and it really did all kick off with the rate cuts earlier in the year, and getting those three rate cuts
Mm.
surely led to a lot of this market growth.
Oh, yeah. Plus the government incentives. Remember, they announced quite a few incentives for first home buyers. And of course, that caused other buyers within the market to react in anticipation of what first home buyers would do. So, yeah, it was a very high performing year. Um, an interesting point that you make about the national prices, but of course, as you and I know, um, when it comes down to the individual property level, you can usually do much better than that, and that's what
Yeah,
you and I specialize in, helping people do.
absolutely.
um, SQM had a very good year. So, would you like to make any comments about this, Scott?
Just that Louis adjusted his base case scenario very early in the year to his scenario 3 when we got that rate cut. which did bump up quite a few of his forecasts.
Mm.
And really, he's done spectacularly well on many markets. I mean, look at the Perth number, 15 to 20.
Yeah.
Brisbane, 11 to 16. I don't think too many people called Darwin, so we've got to, you
Mm.
know, skip over that one a little bit. But even the Melbourne and Sydney numbers are all within range. Just had quite a good year, I would say. Well done, Louis and the team.
Yeah. And he's always been closest to the pin at the end of the day, and that's why we rate him so highly.
Mm,
So if people want to see Louis' forecast for 2026, you can actually check out our Market Watch episode number 22, where we covered off his forecast for what he thinks is going to happen in the coming year. Mm. So, Scott, would you like to take us through the summary for the rental market?
sure. I normally take this one. So we've got annual change in rents there, and you can see that surge in Darwin with rents for houses up 7.6%. I mean, the house price
Mm.
growth's a lot higher than that. So yields would be falling based on that number. But we're still seeing good growth in rents in Brisbane and Perth, both around 6%. Melbourne rents a bit weak, under inflation there at 2.5, as you can see,
Yeah.
and some quite high numbers with the units. And that is something I think we are seeing is houses are just getting a lot less affordable for many people in these capital cities, and you are seeing more people starting to look at units for a variety of reasons to either buy or rent.
Mm.
And that is also a place where supply's been the most constrained. Just seem to be
Mm.
struggling with the ability to build new units in this country right now.
Yeah, exactly. Yeah, and that, like, there is a big spike in rental return. Look at that, Sydney houses 4.9 and Sydney units
6%.
6%. So
I
yeah,
mean, just as an example, two-bedroom units close to the city here in Sydney, they're often renting for close to $1,000 a week now, and 2 years ago that was 700 to 800. So
yeah,
there are people
crazy.
wearing some very large rent increases here in the city.
Yeah, it's crazy. Need to do something about supply. Okay, anything
Yeah.
else you want to mention about that?
Just that it's supporting investors as well, so if we are in a good position here to have better cash flow, if rents continue to increase, should we get any future rate hikes, but we'll get into that in some of the next factors here.
Um, Mentionable news is normally one of the most interesting parts of Market Watch. And so by special request, we've expanded this section for today and going onwards. So we've got three components to our mentionable news: the Australian property market, global forces, and infrastructure. So for what we think is impacting the Australian property market, so what's changed over the last couple of weeks and what will be changing in the next couple of weeks. So what's happened recently, population numbers were released in December, and so the result was that um, for the 24-25 year, there was an overall net migration increase of 300,000, which was a slight drop of around about 100,000. Of course, we're still dealing with housing supply shortage. So, and if we're going to achieve our targets, we need to be delivering about 240,000 dwellings per month. And we're, I think, sub 100,000 a month. So really getting tricky with that. As Scott mentioned, rental pressure is still a, a big factor, largely flowing from low supply. We have got in the Tailwinds section, which I forgot to explain. So Tailwinds, as Scott mentioned to me before we started, Tailwinds help the plane fly. So Tailwinds are good, headwinds are bad for the market. So just a distinction there. So market momentum. So Brisbane and Perth really have the tailwinds, and select regionals. So we're starting to see some really massive activity happening in some key regionals. Headwinds, of course, the RBA is expected now to maybe start increasing interest rates. There's a bit of credit tightening, so the banks have tried to start locking down some more voyeuristic or adventurous lending that has been going on, and an affordability cap. So even though there's incentives for first-time buyers, the fact that prices are, a bit toppy, is really sort of starting to have an effect on the downward pressure on some markets. I don't know if I explained that correctly or clearly, but it's basically saying that people have to be able to afford to purchase, so that might dampen some markets. And next slide, which is international, I'm going to hand over to Scott. Can you cover off?
Sure. Got some comments here on surging gold prices. People are looking for a hedge against inflation. They're looking for safer asset classes. So also see some very large price increases in silver, interestingly. And I do follow some of the other commodity markets. And there is just a lot of talk about rising commodity prices across the board that could later flow back into inflation. So definitely something to kind of keep tabs on as an investor. Oil prices are looking pretty good. If you've been out, pulled up your car lately, you probably have spent in the $1.50 range or so to fill up. And I've heard we're going to be seeing prices back at COVID levels in the next couple of months. So that's actually quite a positive, I think, for inflation, and good for sort of everyone. A bit more money back in our pockets. And we've got some uncertainty in global capital movements. On the headwind side of things, well, we've all seen Trump's move in Venezuela, going in and taking Maduro out in the middle of the night. Certainly it's raised the hair on the back of my neck. What else could be coming there? We try not to make this podcast political, but we are seeing some things that are destabilizing for the world order out there. China's growth slowing down. That could certainly have an impact on us. They have put some quotas on our beef recently. Did notice that. And in terms of interest rates, got some interesting stuff happening in the U.S. If inflation is holding up higher, it's going to be hard for them to cut interest rates. But Trump may put his own guy in there anyway, and they may cut regardless. So I don't know what to tell you there. You want to say something about these foreign markets, Deborah? We've got UK and New Zealand.
Yeah, so we do keep our eye on what's happening in some of the other major, or like the bigger property markets internationally, and it's very very clear that the UK is really experiencing a very slow market at the upper end, because they changed their tax rules, and so it has meant that some of the more like the billionaires moving out of the UK, some of them. And then New Zealand still remains weak at the top end, which kind of leads into what's happening in the Sydney market. So Sydney market is starting to cool at the top end. But what I would always say is when the world destabilizes, people turn back to property. So, who knows what's going to happen next? Well, I expect I know, but whatever. All right. So then I know this slide has got too much information in it. So we're just going to pull out the highlights. But this is about infrastructure. So infrastructure projects really impact the price, positive and negative for property. What I'm doing with this section is just showing you what projects have been mentioned in the last couple of weeks and what might be kicking off in the next couple of weeks. So high level, just this week, the new design for the Brisbane Olympic Stadium was released. Looks gorgeous. Toowoomba has released a range of different projects. Toowoomba is off the charts from a performance perspective, and rightly so. It's like a beautiful area to live in, and it's got all the jobs, all the families. It's a lovely place to live, and I position it like a better Blue Mountains. That's all I'm going to say there. Bundaberg is having a development surge. So it was announced that there was quite a few major residential, industrial and health precinct expansions that are going to be led by the government.
I'll jump to Sydney, which is of course my favorite city, being where
Yeah.
I reside. We've got the Sydney fish markets opening up here in, I think, maybe 10 days or so. World-class fish market, just once again demonstrating to the world what an amazing place Sydney is to live in. So that's going to get quite a lot of global news, I think. We've got the continued development of infrastructure out around the airport with Bradfield City.
Yeah.
And that airport's going to be opening up later this year. Is that right, Deborah?
It is, yeah. Mm-hmm.
The Western Sydney Airport will be opening later this year. I think some of the infrastructure is lagging behind there, so that's something we'll keep tabs on, the motorways and train lines. We've got the Metro Tunnel down in Melbourne, providing much faster access for people driving down there. Some good news for Melbourne commuters, people going to the airport. And out in Perth, just a lot of continued infrastructure development with roads. They completed a lot of their train line upgrades now. There's still a few drops that are coming, but just a lot of money going into the highways themselves. And, I was actually just looking at something. One of the new train lines that they've done, they put parks underneath all the trains, which were sort of up in the air. It was just literally kilometers upon kilometers of parkland there.
Wow, that'll
just
be
have
gorgeous.
so much money flowing into improving amenity and lifestyle for people out there. It's just another positive for Perth.
Yeah. And we will do a special market watch on infrastructure because there's quite a few really big projects coming to fruition in 2026 and we need to be aware of them. But I'll take a look at that the rail parks. Sounds good. Okay. So for our in focus session, in this episode, we're doing something a little bit different. So Scott will run you through some of his projects that he managed over 2025, and then I'll take you through a few of mine. So Scott, over to you to
Off we go. And this is an exclusive for everyone here on our podcast. I haven't shown these results anyplace else.
Okay.
We focus on the new property space. Just as a reminder, that means a lot of our clients are buying land and building properties. And we'll sort of jump into just a couple of houses that our clients completed this year. Very nice one built on the Sunshine Coast here. You will find it is practically impossible to find anything for under $1 million on the Sunshine Coast up there now. Absolutely crazy. Now, clients are typically committing to these in contracts the year before and taking about 12 months to get the property built. So this one finished earlier this year, was the land and the build about just slightly under 820,000. It's a lovely house, media room. Look at the rent, $780 a week, which really surprised me because I was expecting $750. So still getting just some really good yields in markets like that. And we like the Sunshine Coast because it's just a good, solid, long-term performer. It's just going to face affordability limitations, as we pointed out earlier on. It's just going to be fewer and fewer people that can get into that market with, houses starting at $1 million now.
Yeah. Okay.
We can go to the next one, which is an example of a house in Brisbane. So very similar to that one, actually. This one's in Redland Bay Council in Victoria Point, for those of you that know Brisbane quite well. It's pretty close to the water. It's in a new housing estate there. We managed to get a nice size block. We don't always build houses on blocks over 400 square meters, but we were able to get our hands on this one. This was built for under 870,000, rented for $730 a week. We're not getting the rental yields in Brisbane we typically would get on the Gold or Sunshine Coast. But the growth has just been, amazing. Again, looking well over $1 million entry level to get into some of these areas. These are nice livable homes too. 4-bedroom. They've got a second living room, media room, small yards out the back, and they typically are in estates that have parks and just a lot of amenities nearby.
Yeah.
So that was sort of two of my favorite house examples.
Okay.
This is a dual key house. We did this one out in Perth. I know the suburb quite well. It's in Eglinton, which is on that north train line going out of Perth. I know it so well. I'm building out there myself at the moment. And that is a 4-bedroom house with a 2-bedroom granny flat on the right-hand side. You'd never realize that was the case, but it's going to have 2 mailboxes out the front.
Oh, yeah.
Land was
entry
priced
around
very well back there 18 months ago, and that was completed around the middle of this year. The client paid just under $760,000 to build that, but look at the rents, $1,120 a week.
Amazing.
And they have inched up slightly even from there. So that's in a nice estate. I'd say maybe 3 kilometers from the beaches out there, and just a lot of stuff happening in that Alkimos Eglinton corridor.
So where would the door? Where would the door for the granny flat be?
It is just around the side. You can't really see it, but there is a door hidden around that corner.
Okay.
It is in there in that shadow area.
Yeah.
You don't have to jump over the top of the garage to get into it from the back.
Okay. Yeah. That one sounds good.
So very sexy dual key there. And we do a lot of these dual income properties still. It's just that in Brisbane, watch them just kind of head up north of $1 million in most areas there. And we're spending more time looking at regionals now to get what we're typically looking for, which is a 6 to 7% rental yield on these.
Yeah.
Next one.
Wow.
This is a duplex project that was done by a client up in Harvey Bay. I'll sort of commend this young investor because we put the project together and then he went out on his own and found himself an even better deal on quite a nice block. So he took our project and slightly improved it. Well done. This was put together for just under 1.1 mil.
Yeah.
That is 2 4-bedroom houses, and each house actually has a media room in it, just to show you how big they are.
Yeah.
nice area of Harvey Bay, close to the beaches, and just some very significant equity uplift on this. I'm not going to talk much more about this one.
Yeah.
It's just kind of
Yeah.
limit it to that. But it's just an example of a duplex project. You want to buy something in a good growth market, end up with a nice, high quality build that delivers some good equity uplift when it's done. And this one
Yeah.
really did check all the boxes.
Mm. Yep. Okay.
And I think my last one, now this one doesn't look all that flash. So you sort of look at the property and think, wow, what is that? That is a rooming house in Manly West, up in
Mm.
Brisbane, very close to the water, very desirable suburb.
Mm.
And that has 5 one-bedroom units under that roof. So we show the floor plan down below.
Yeah.
There's a large central kitchen, and we've done a podcast on these rooming houses before.
Yeah.
Getting very hard to put together in Brisbane. This one, amazingly, was done for under 1.3. Would
Mm.
probably cost close to 1.5 now to try to recreate this if we could. But just have a look at the rent. So these 5
Mm.
units rented for between $460 and $490 per week each.
Wow.
$2,375 of rent on a $1.3 million purchase. I mean, we're normally quite happy when we see $1,300, $1,400 a week rent on a purchase
Yeah.
like that. This is, 80% higher than that. These are just amazing cash flow opportunities. There's
Yeah.
probably a pretty tight window on these where we will not see these getting built in Brisbane in another year or two.
Mm. Yeah.
So yeah, I think that gives me sort of top 5, I would say.
Yeah. Or examples of the different projects. Yeah.
Yeah, it's certainly examples in the different categories, and there are many more that we worked on in different areas.
Yeah. And 2026 has got some fun things on the drawing board, I understand, but we'll talk about that in one of the other episodes.
Sure. And now Deborah's gonna give us sort of a little sneak peek at some of her little gems.
Yeah. Okay. So just wanting to say that we're keeping the details very high level just to protect confidentiality, really. But yeah, so at the property frontline, we buy all different types of properties depending on what clients need. And so this is an example of a home purchase that we bought for a fantastic young couple who had been looking for a very long time, and really they worked hard on their selection, but just finally toughed it out and got such a really great purchase. Really a good price right within their budget. It was certainly under the 2 million. But yeah, they're set up with their forever home in a beautiful suburb just south of Sydney, not far from the beach. So
Very
that
jealous.
one, yeah, is a really good one with their 2 lovely children. Lovely lifestyle. This next one is one of my favorite types of things to buy. So this is an investment property purchased, certainly sub 1 million, with good rental return. So we would say it would be comparable with the purchase price. I don't really want to talk about numbers, but basically, if we've paid 900,000 for the purchase, we want to have close to 900 per week in rental return. But the great thing about this is it is very close to some very important infrastructure in this particular suburb. I'm sounding very cagey, but I can't really, mm, mm, you know, all I want to say is it's in a very good spot, and it is zoned for higher density. So it's fine for the owners to just rent it out right now, but they will have the opportunity to turn it into 6 townhouses if they want to.
Wow.
capital growth is really spiking in this particular area, and really good rental return as well. So that's good. The next one I have is something that we do quite often for our portfolio clients. So once you've got your portfolio delivering for you, often clients will want a special kind of property that they might be using as a weekender, or where they might retire or do something different from a living perspective. Anyway, so long story short with this is a property that was, I will say in the ballpark of around about, 100, what was it? Oh, wow. I've forgotten actually how big it is. 100 acres, something like that. And, yeah, but we got it for a very, very good price. Was a long process to actually get it sorted, but it was exactly what my clients were looking for, and really suited them down to the ground. So they've got the lifestyle property that they want, and as it turned out, which was very, very rare with these types of purchases, it was a newly built home. Well, when I say new, was built in 2022. But yeah, beautiful property with lots of amenity and a really, really great local community. Was
Lovely.
really nice. And then so this is another type of project that we buy quite a lot of. So I would call this, would I call it a radical in renovation? Um, mm, Maybe. So my clients were looking for a really, really good, well-priced property in an area with very, very strong capital growth, where they could do a little bit of work to the property to add value. And so this property, it is 4 bedrooms, 1.5 baths. But what the clients here will do is they will lift the property and build in underneath, and yeah, add so much value to the property just by like the work that they'll do. But yeah, once again, protecting the price that we paid, but it was, yeah, sub 600,000 in a really great area. Um, mm, then, yeah, and I guess my final example is another sort of lifestyle purchase for a client who really wanted a good base, like it is in Sydney, and she just wanted kind of a bolt hole to return to when it suited her. And yeah, like buying units anywhere is quite challenging. But yeah, this search was certainly a long one, but we ended up with a really great result. You do need to do much more due diligence when you're buying either a townhouse or a unit, because you've got that whole layer of strata. But yeah, anyway, and yes, Scott, you did one of the viewings for this for me, didn't you?
Yes, I did walk through that one. Just some
Mm,
amazing views that coming back to mind here. And
yeah.
yeah, some real scarcity value in the asset. And certainly I've never been a fan of units myself, but
Mm,
recognize there are ones out there that are quite unique,
mm,
with views not to be built out. And
yeah.
yeah, look at that. Just lovely. It also had views of the city, I think, in one of your other photos too.
Yeah, it does. Yeah, on the shed.
Mm,
Yeah, the shed level.
nice one, Deborah.
But yeah, okay, alrighty. So as usual, just wrapping up now. So when you're buying for yourself, make sure you use really good independent data when you're making your decisions. Always conduct really good financial pros and cons. Use criteria. We say this over and over. You can't copy what someone else is doing with their portfolio. Buy what's right for you. And if you're not sure what's right for you, talk to people like Scott or me. So you can find Scott at his Facebook page. The details will be included in the description of the podcast, or the YouTube thing. And and Scott can talk to you about what you could achieve, explore, within your criteria and your risk profile. And also at the Property Frontline, we specialise in developing up strategies for people. So we are running a new event in February. I will include details in the description box, but it's called the Property Smart Start. It's actually helping people to think through their criteria, like what's the best way to make a good decision, what's the best choice for you. Like some people are stuck whether they should be buying a home or investment. If they're going to buy an investment property, what kind of project? So in the Smart Start, we'll be talking about how to make those decisions, and we'll cover off like how to filter out that noise that you get from, everybody telling you what to do, so that you know what your choices are, and also give you some tips to make sure that you are buffered from some of the bad hype marketers out there, just trying not to be too mean. So that's coming up. And so if you enjoyed this podcast, first of all, thank you very much for watching. If you have enjoyed, make sure you give us a like or subscribe for our next edition. Next time on the Market Watch, we will be updating the 2026 market forecast. We will also be reviewing some key strategies that you could or may want to use for 2026, plus lots more. Okay, so time for us to say goodbye. So thanks for your time again, Scott. And do you want to say goodbye?
Sure. Thanks for everyone's time out there for the year, everyone. We'll hopefully keep putting this type of content together for you if there's interest. And watch out for the heat out there, especially in Adelaide, down in Melbourne. Wow. And our players at the Sydney Cricket are going to be sweating it out today as well.
Oh, well, that's summer for you. Yeah. Okay. Thanks a lot.
Goodbye,
Bye.
everyone.